Points. Points are an interesting little world. So in the lending world, there's the par rate, which the par rate means it's the rate based on the market today to where you don't pay anything and you don't receive anything. Now, let's just say, for easy numbers, let's just say your par rate is 4%. Okay, so your par rate's 4% to where you're not paying anything for this rate, you're not getting any credits for this rate. Now, let's say you want to roll in closing cost, we go above par, which means you're going to take a less favorable rate based on the market for that day, and the lender is going to give you a credit for said rate. So let's say you're going to take a 4.5%, and the 4.5% gives you a credit of $2,000, hypothetically. Okay, so now you're going to take a 4.5% interest rate, you're going to get a credit of $2,000. Or let's say that you decide to go below par based on the market in your particular file, and you want to take a 3.5%, and that 3.5% cost you $4,000. So if you decide to go with either one, 4.5% or the 3.5%, and you either have to pay for it or get a credit for it, that goes towards your closing cost. So if you take the higher rate, the $2,000 goes as a credit towards your closing cost. Or if you decide to take the lower rate, the $4,000 gets added into the total amount you would owe at closing. So it's not something you have to pay right then and there. Now, every lender is slightly different, and again, it does depend on the market. So if it's something that you are wanting to do, talk to your lender, see if it even makes sense, because it may not. For me, when I talk to my borrowers and I'm like, hey, is this something, how long do you plan on being in the house? If it's like, oh, I'm only going to be here 2 years, it's my starter home, it may not be the best idea to buy points. If it's something where it's your forever home, it may be worth it, depending on how much the mortgage payment fluctuates and how much it costs for that particular rate. So obviously rates are going up. We're not seeing them going down anytime soon, if at all. So just keep that in mind. If it's something that you have the extra funds and you plan on being there for a while, it's worth talking to your lender and asking them, hey, when will I break even? And then figuring out if it makes sense. Because some of my borrowers, they're like, I'm going to be there 3 years. I'm like, well, you're not going to break even until 3.5 years with how much it costs. So just take that into consideration, and hopefully that helps.